of a coalition deal in Germany lifted the single currency across the board, but looking forward, how is it likely to perform against its peers? On the line to share his forecast is Peter Kinsella. Peter, the yen has been weaker than most other majors, and the euro-yen broke decisively above 138 and rallied to a fresh peak of 138.52, amid news of Germany's two biggest political parties striking a deal to form a new government before year-end. As 2013 draws to a close, do you think it could climb as high as 139 psychological level?
I think we can easily go to 139. I think we could even easily see 140. Remember, it's not just a euro move. If you look at dollar yen's trading significantly higher as well. So you're seeing broad-based yen weakness. That's consistent with the equity gains you're seeing both in Japan and elsewhere. So it's basically the yen is being sort of, let's say, sold as a funding currency, and that's quite consistent with, let's say, the general macro picture that you're seeing everywhere else. So I think higher levels in euro-yen, they're easily achievable in the short to medium term.
The selling interest around the euro-pound is now intensified by the strength surrounding the sterling, dragging the cross to weekly lows as results came in line with expectations from the UK GDP during the third quarter. But how do you see the pound performing against the resilience of the euro? Will central bank action be the main driver for this pair?
Frankly speaking, I think that euro sterling is going to trade lower, both coming into year-end and over the medium term. That's predicated on more sterling strength and also on more euro weakness. I'll explain why. Basically, if you look at sterling, you now have a combination of what I call disinflationary growth, that is falling inflation, but also decent, sort of, let's say, economic growth. At the same time, you also have an improvement in UK real yields. So this combined really is a perfect environment for currency appreciation. Now, that on its own is good for sterling, but then you have to look at the euro leg of what's happening. Basically, obviously the ECB has cut rates to an all-time low of 0.25%. The question is what they're going to do in sort of the coming year, in early 2014. There are some talks that the ECB might engage in sort of a funding for lending type LTRO scheme. However, on top of that, then you also have the possibility of the ECB engaging in negative deposit rates. This shouldn't be completely discounted. So all told, you have a situation whereby the euro will probably stand to lose some ground, not just because of what's happening on the euro leg, but also with the Fed, which we'll speak about in a moment. But also, overall, I think you're looking at an environment of more sterling strength. So I think further downside in euro sterling is entirely possible, and probably over the course of 2014, I won't be surprised to see euro sterling trading in and around 0.80 cents.
A weak consumer confidence report released early Tuesday softened the greenback by fanning ongoing expectations for the Fed to keep its dollar weakening monetary stimulus programs in place through early 2014. As we enter the festive season, what do you think will be the key levels for the euro-dollar over the following weeks and months?
I think really what you're seeing is a little bit of sort of year-end sort of euro strength and or dollar weakness per se. And this is normally coming into December. You get a kind of a seasonal move where the euro tends to move a little bit higher in line with sort of exporters doing hedging requirements and so on. The question is really, will this be sustained? If you look at higher levels in euro-dollar towards 138, 140, these have been difficult to sustain over the longer term. The euro is just quite overvalued at that level. And indeed, it's been quite notable that at any time euro-dollar has gone up there in recent weeks and months, it hasn't really stayed there for very long. Coming to next year, obviously you've got the tapering decision and so on. But then on top of that, you also have, let's say, the movement in real interest rates in the US, which are definitely moving higher. So that's a very strong argument in favor of more sort of dollar strength over the course of the year. Therefore, if you see your dollar trade a little bit higher over the course of the year, over the course of the next couple of weeks, to my mind, that gives investors very good levels to enter short positions.
Peter, thank you so much for your insights today. Well, that's all for today's Targets in Focus, but for today's press review, I look more closely at Angela Merkel's grand agreement, so please do click back for that. Goodbye for now.